Welcome back to Alpha Recap. I'm glad you could join us. Today we're breaking down a pretty choppy session that closed with a clear tech-led risk-off. As always, if you have questions, you can reach us at stockalpha.ai. Markets closed down today, so let's walk through what happened and why it mattered.
Thanks for having me. It felt like a snap back in sentiment. Tech really took the brunt. Give me the headlines you're focused on.
Big picture. The S&P 500 ETF finished the day down about 1.5%. The Nasdaq 100 ETF finished the day down about 2%. And the Russell 2000 Small Cap ETF finished the day down about 2% as well. Losses were broad, but the hit was concentrated in growth and large cap tech names.
Right, that kind of trio of moves tells you it wasn't just a one-off in big names. Small caps being hit too means risk appetite pulled back across the board.
Exactly. The narrative was simple. Buyers stepped away from long duration, high multiple names and rotated into pockets perceived as safer or more income-oriented. That produced a sharper fall in the Nasdaq 100 ETF than in the S&P 500 ETF.
When you say long duration, can you explain that for listeners who haven't seen that term before?
Sure, long duration basically means companies whose profits are expected further out in time. Think fast-growing tech names. Their valuations are more sensitive to interest rates. If yields rise or the outlook for lower rates fades, those future profits are worth less today, so the stocks can fall more steeply.
Makes sense. What sparked that rotation today? Was it one big thing or a mix?
It was a mix. On the headline side, a large bank issued a note flagging a modest earnings downside for Apple, and because Apple carries so much weight in the market and in investor positioning, that note echoed through the whole tech complex. Combine that with profit-taking after a long run for mega caps, choppy crypto signals, and a handful of 8K filings that created company-specific uncertainty, and you have a recipe for a knee-jerk pullback.
So a fairly normal cocktail, fundamentals, headlines, and then flows amplifying everything. How did flows play into the outsized drop in the Nasdaq 100 ETF?
After big gains in tech and momentum names, volatility jumped and quant models started trimming exposure. ETFs that track the Nasdaq 100 saw outsized outflows relative to broader market products. That forced some managers to sell into a falling market, which amplified the decline and spilled over into correlated small cap and growth proxies.
That domino effect is always painful when positioning is crowded. Were there any sectors that held up or even attracted buyers?
Yes, utilities were a relative outperformer. Investors flowed into them as a safe haven, and because of constructive narratives around electrification like EV charging and solar. Real estate had pockets of momentum too, helped by lease deals and the income orientation of many property names. Materials and mining even saw some positive moves on M&A and funding headlines.
Interesting to see that mix. And consumer discretionary was mixed, right? Some winners there?
Correct. Consumer discretionary and retail were mixed. Shopify was called out as a strength, with investors rewarding signs of durable e-commerce monetization and adoption of AI tools. But the sector couldn't fully shake the broader risk-off tone.
Any single name stories that really stood out to you?
A few. Roku was a notable gainer. It rallied on headlines around improving ad trends and subscriber monetization, which shows how idiosyncratic catalysts can buck the broader move. Apple came under pressure after that banknote. Cisco and Applovin were among active movers, reflecting sensitivity to enterprise spending and ad tech debates. There were also several 8K filings. Companies like West Pharmaceutical Services, First Energy, Advanced Drainage Systems, TransUnion, Southwest Gas, Geo Group, and Quince Therapeutics. And those corporate updates produce stock-specific volatility.
That kind of fragmented backdrop makes for a tough tape, lots of dispersion. How did crypto factor into the tone?
Crypto showed mixed behavior with bouts of volatility. That uncertainty in higher beta assets made risk-on traders more cautious and nudged flows toward cash and defensive sectors. When crypto is choppy, it often amplifies nervousness in other speculative pockets.
Let's talk macro and the Fed. There wasn't a Fed event today, but how did the market's reaction reflect policy fears?
Even without a policy event, the market's sensitivity to the Fed's path was clear. With stretched valuations in tech and renewed earnings skepticism, traders reminded themselves that if inflation doesn't fall as cleanly as hoped, the Fed could be cautious about cutting rates. Bond yields had been drifting up in recent sessions, and that dynamic punishes duration-heavy sectors like growth tech. The takeaway? The market is still very data-dependent.
Which data points should listeners watch next?
Watch CPI and PPI prints, payrolls data, and any Fed speaker appearances. Even routine data that shifts the inflation trajectory or job strength could reprice risk assets quickly. Those items will be the headlines that matter in the near term.
From a technical perspective, what were traders watching after the close?
Breadth deterioration was a big concern. The Nasdaq 100 ETF's larger decline suggests leadership rotation is underway. Traders were watching whether the S&P 500 ETF could find support near prior consolidation ranges and whether the Nasdaq 100 ETF could hold short-term moving averages. If those levels failed, heavier selling and an accelerated correction would be likely. Volume patterns showed heavier selling on down days, a classic sign of distribution, and small caps underperformed again, indicating risk appetite among domestic growth players was shrinking faster than in large cap value or defensive names.
So this could either be a healthy reset or the start of something bigger. Any historical context to help listeners frame today's move?
It was sharp, but not unprecedented. In multi-year cycles where positioning gets concentrated in large cap tech, you can see outsized down days. What matters now is whether this pullback resets stretched sentiment or morphs into a broader unwind of high multiples. That depends on incoming data, earnings, and whether the technical support levels hold.
Looking ahead, how should traders and investors scenario plan?
Two scenarios. If inflation prints soften and Fed commentary becomes more dovish, expect a relief rally led by high-quality growth names as duration unwinds. Opportunistic buyers will look for re-entry points in oversold leaders. If data stays sticky and corporate guidance weakens, anticipate deeper rotation into defensive and income-oriented sectors like utilities and high-quality real estate investment trusts with continued underperformance for momentum-driven tech names. Either way, prioritize liquidity and have a plan for elevated volatility.
Those are practical takeaways. Before we close, anything else listeners should track on the earnings front?
Keep an eye on the next slate of big cap reports and any follow-ups to that bank note on Apple. Corporate-specific catalysts will continue to drive dispersion, meaning some names will buck the tape while others get punished. Also watch for more 8K filings and company updates that can create headlines-driven moves.
Great. To wrap up, give us 3 quick takeaways from today.
1. Markets closed down with the S&P 500 ETF off about 1.5%, the Nasdaq 100 ETF down about 2%, and the Russell 2000 Small Cap ETF down about 2%, underscoring a broad risk-off. 2. The move was driven by a mix of headlines, profit-taking, crypto volatility, and ETF flow dynamics that amplified selling in growth-heavy products. 3. Watch CPI, PPI, payrolls, and Fed speaker comments, plus earnings and technical support levels, because any of those can quickly change the market backdrop.
Solid summary. Thanks for the run-through. Always helpful to hear the interplay between headlines, flows, and technicals.
You bet. That's it for today's recap. If you have questions about anything we covered, head to stockalpha.ai, where you can ask us directly and we'll answer live. For more market analysis and insights, visit stockalpha.ai. Thanks for listening, and we'll see you next time on Alpha Recap.